What's up, guys? This is Trade Correct, and I'm Chibuzo. Yep, I'll be analyzing AUD/USD for our next week. So let's see what do we have in the market right now, and what do I presume will happen for next week. So this is a weekly chart, and AUD/USD has been bearish for a very long time, since 2021. Since these lows were broken, the market has been falling. So this is a bear market from the higher time frame. The reason why we do this is we don't want to be caught up on the wrong side of the market, and so it's good to go up and see what is going on a macro level. We had this low, all right, let's start from here. This high created a low, and created a lower high and a lower low and a lower high and a lower low, and that's simply like a bearish pattern. The market is selling, and we had this deep pullback that caused this high to break, but it didn't give us a bullish signal because it's just a weak break, and a weak break is a liquidity sweep, not a break of structure. So we had a liquidity sweep here, and price mitigated the supply above, and we had this break of structure and break of structure, but at this point here we had the bullish break, and I would have been considering buys. I remember this time of the year I was considering buys because we had a bullish break of structure on the weekly chart. But now in hindsight, I can see that price pushed up to mitigate this weekly flip right here to continue selling. And by the time when this low couldn't create a new higher high, it simply tells us that this low is weak, and so price is going to run through it, and that's exactly what happened. All right, so what do we see on the weekly charts? We can see price is recently mitigated a weekly demand level. This whole candle is a demand, but I picked the week because that's where the orders will be, as it is. So on the weekly chart, you can see price mitigated as demand, and honestly speaking, I think it's time for the weekly pullback, because for the past 5 weeks the market has been selling 1, 2, 3, 4, 5, and the market will not keep going on in one direction forever. The market moves like waves. You can go back and check it. It goes down, it goes up, it goes down, it goes up, it goes down, it goes up, and so whatever goes down is going to go up, and whatever goes up is going to go down. So that's simply the way the market moves, and the market has been selling for the past 5 weeks, and now it mitigates a weekly demand. Now simply you know that, okay, in a bearish market, what will demands do? Demands or demand zones or demand candles will simply facilitate pullbacks. So simply, what do I expect? I can see this low and this high and this break of structure, and this is simply a simple bearish pattern. I'm expecting a pullback to 50% or premium level of this price range, then we can continue selling. So this is my own projection or analysis for AUD/USD, and we don't execute on the weekly chart. We'll go down to lower time frames to see what the market is saying. All right, network is a bit slow. All right, here on the daily chart, what do you have on the daily chart? I already marked it out, so we'll just run through it together. It should be here. Excuse me. All right, on the daily chart, we have this daily swing high and daily swing low. How did I mark this out? It's simple. Just locate the nearest break of structure. We've been looking at price all this while, and this is a low, and this was the high, created a new higher high, higher than the previous high, and the market created a low and failed to create a new high, so this low failed. Simple. So from this break of structure, the highest point is this high, so this is your daily swing high, and the lowest point after the break of structure is this low, so that's a daily swing low. Easy peasy. So once you identify your daily swing high and your daily swing low, the next thing you want to mark is your price range. You want to know your premium price and your discount price, and you do that using your Fibonacci tool. This is how I want my Fibonacci to look like. You might not want this. You can use whatever setting you want. So this is the 50% of my Fibonacci, and appropriately you want to be selling at premium price, you want to be selling at higher prices. So we have this supply here and we have this supply here, and this one has been mitigated. So just before the supply, I can see these highs and I'm seeing buy side liquidity. I can see equal highs, talking about these two highs, so this is like liquidity for this buy side liquidity for this supply. And merely looking at the charts, you can clearly see the volume of price has reduced. What do I mean? You look at the volume of the candles at the beginning of the fall and look at the volume of the candles now. It's showing you exhaustion, so these are the things you see and you'll be like, okay, I feel, or not I feel, from what I see, the market will likely have a pullback. Why? The volume of the bearish candles has literally reduced, so it is fine if the market start pulling up. All right, so that's besides what I should be doing today. On the 4-hour chart, what do we have on the 4-hour chart? All right, same thing we do on the daily, we do on the 4-hour. Whenever you enter a new time frame, your work is to identify your swing high and your swing low and your premium price and your discount price, so you know how you should trade within that range. So on our 4-hour chart, our most recent 4-hour high is this and our most recent 4-hour low is this. But before I rush to that point, let me just give you a quick storyline. So price mitigated, I believe, is a daily low from maybe 2022, and we had this price action. So price swept this liquidity, mitigated the supply above here and broke structure. Now price created this flip, mitigating this demand, on the 4-hour chart, created this flip and broke structure. Price came back to mitigate the flip that was created, and we had further sales to the downside with tiny pullbacks. Now you are seeing that we're having tiny pullbacks in the market, and that's why I'm saying exhaustion. The trend is exhausted, so we'll likely have a pullback very soon. All right, a tiny pullback, and price broke structure again, tiny pullback, and we had this. So we're yet to have a break of structure to continue our sales, but this is what we have right now. So if we were right here, this would be a good trading opportunity. We have this supply partially mitigated, and this guy will act as liquidity for the sales. On the 1-hour chart, just simply explains or gives us more context of the 4-hour charts. I'm trying to get this Fibonacci to show on the 1-hour. All right, so we have this. Okay, and I don't want this guy to be on the 1-hour, so take you out of here. Simple. All right, what do we have on the 1-hour chart? Yep, the 1-hour structure basically aligns with the 4-hour structure, and so it makes our analysis easier. We don't have to draw a 1-hour high and a 1-hour low because it aligns with the 4-hour structure. So same thing we have on the 4-hour, same thing we have on the 1-hour. Price mitigated this level, and we're having, we're not having the kind of movement we had before, like price mitigated this level and sold impulsively. Price mitigated this level and we're having this lethargic movement. So you can see, okay, the trend is coming to an end. Should I begin to look for buys? Because you may want to catch the pullback early, so you can, make a lot more out of it. But I would advise that you wait for this high to fail before you catch any pullbacks, except you are really, really, really good lower time frame work. So I'll be waiting for this high to fail. So we're waiting for this high boss internal break of structure. Why is it an internal break of structure? Because you can see our external structure is this. So whatever happens within this high and this low is internal structure. So it will be good to see an internal break of structure at this point, and if price breaks here, then we can come down and begin to take buys, and target the daily or weekly 50 fib level, 50% of the fib level. But right now, what do I see on the lower time frame? I see this demand here on the 1 hour was mitigated by this guy, and okay, what's going on here? I also see this demand here was mitigated, so I'm seeing series of will I see demand chains, and price pushed higher and began to sell. And then we had this mitigation right here, and we start having bullish moves. If the market is going to go higher, I want to wait for this place. I want the market to tell me to commit at this point. So if the market takes out this high, I just set the price alert there. When the market, or if the market takes out this high, then I'll be willing to participate. We could see this on Monday. We could see this when the market opens. Price could actually come down to this candle, mitigate it, and push higher. But I'll be willing to commit to price, after we have this boss. Then I'll come down to lower time frames and look for entries and hold the buys. So that's it for AUDUSD. Right now, I'm waiting. I'm sitting on my hands and waiting until this level is taken out. Alright guys, have a wonderful and amazing trading week. Yep, I'll be back to explain whatever trade ideas I have during the course of the week. Peace. Hey, what's up guys? Welcome to Trade Correct, and I am Chibuzo. Alright, I'll be analyzing EURUSD for the coming week or coming weeks. So this is the monthly chart on EURUSD, and why do we keep going back to the higher time frame? Simple, we want to know what the trend is saying. We don't want to trade against the major trend, and we want to be careful, So EURUSD has been bearish for a very long time, since 2013. The market has been in a bearish move, major pullbacks, bearish move, major pullbacks, and so I'm just going to be quick with this. So, market mitigated the supply point at this point in 2021. We had a internal break of structure on the monthly chart, and the break of structure right here, and price has pulled back for the better part of 2023. We say for the past 7 months, price has been in a monthly pullback. Alright, so if you look at the monthly high, will be somewhere around this point, and the monthly low will be somewhere around this point. And this is the 50%, and price went up to the premium price and mitigated our monthly, monthly supply, definitely. And something else that shows me that the market is ready to sell is this. If you know how the market works, you know that at the end of every trend, there will be consolidations, or the market will show you that the trend is exhausted by clustered candles. So I don't want to take so much time in this video, but you see there was this pullback, and you see this cluster of candles, and the market falls. There was this downtrend here, and you see this cluster of candles, and the market rises. So change of trends, consolidations, and there are other trading strategies. We call it accumulations, distributions, and all those kind of things. Different names, different ideologies, same results. Alright, so price mitigated a monthly supply, and I'm looking for sales, or I know the market is going to fall. I feel my strategy is telling me I should sell more than I buy. And on the weekly chart, you can see price is bullish on the weekly chart, internal structure actually, and you can see price mitigated a weekly demand point at this point. And I don't want to spend too much time here. This is a weekly low, and this is a weekly high, and this is our 50%. And if you look at it, price mitigated this demand here, and the market failed to create a new higher high. Instead, price swept the previous week's high, and we are having sales. So already, price has flipped this demand and created this supply. If you understand this, if you don't watch our coming videos, you will understand. So on the day, so basically I'm saying the weekly chart is bearish, higher time frame, external structure, but internal structure in the weekly chart. Weekly chart is bullish for now. Yeah, until this low goes, we're still having bullish charts. Yeah, on the daily charts, this is where I want my focus to be on. Having a bit of a slow network here. All right. Daily chart is bullish. As you can see, we have our daily swing low here, a bullish break of structure, our daily swing high at this point, and we have this bearish pullback. All right, guys, and you can identify your premium and discount price with your Fibonacci tool. The reason you do this is you don't want to trade in the wrong direction, and you don't want to be doing the wrong thing. We buy at discount price and we sell at premium. All right, guys. So what do we have here on the daily charts? Zoomed in on the daily charts, we have we had a consolidation here for a couple of days. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. So 10 days consolidation. The market pushed up, swept liquidity, and we had a break of structure. Why is this a liquidity sweep and why is this a break of structure? Simple. This is a weak break and this is a body break. So for me, weak breaks are liquidity sweeps, and body breaks are break of structure. All right, I can take this off. Don't want my chart to be filled with so many things. And what do I see here? I can see this supply as the supply that broke structure. So for me, this is valid supply. Excuse me. All right, and looking at the daily chart, I do not want to spend too much time here, but I can't help it, man. There's so many things to talk about. Looking at the daily chart, you can see a series of highs: 1, 2, 3, 4, 5, and all these things are daily highs. You understand liquidity. This represents buy side liquidity. So we can see there's buy side liquidity for this supply above. So it will be nice to catch a buy to take out those liquidity. We'll need our lower time frame to tell us if it's time to do that or not, because the lower time frame reveals the higher time frame. So you want to be on the lower time frame, but patiently waiting for the right signals. All right, on our 4-hour charts, what do we have on the 4-hour charts? Okay, our chart is a bit messy, but let me start from the top. On the 4-hour chart, I think this was late last month, July. We had this consolidation and this push up, sweeping the buy side liquidity and the break of structure, and we had this pullback, the weekly pullback. The market sold and we had we had lower lows and lower highs. We had the lower high here that created a lower low, and then we had this point of consolidation. This is what I was talking about on the daily chart. We had this period of consolidation, and I like periods of consolidations because just tells you that the market is preparing for a very, very, very nice move. So after this period of consolidation, the market swept the liquidity above here and had this internal break of structure and this external break of structure. So then your question is this: how do you identify your 4-hour high and low? It's very simple. Take all these off for now. Let me take all this off so I can draw them again. Alright, so how do you identify your 4-hour high and low? It's very simple. Find your most recent break of structure. That's this guy. Where was it broken here? Find the highest point. If it's a bearish market, if it's a bullish market, you find the lowest point. So this will be your 4-hour high. And after your break of structure, where's the lowest point? This is the lowest point. So this will be your 4-hour swing low. So now we have our swing high and our swing low identified. The next thing to do is find the price range. Your premium and discount price using your Fibonacci tool. That's the next thing to do. So use our Fibonacci tool here to find our premium and discount price, and the dotted line at the center is our 50%. That's equilibrium, and everything above equilibrium is our premium price, and everything below equilibrium is our discount price. And we want to identify your supply. So this number one, we have this supply here. This is the extreme supply here on the 4-hour chart. Just properly draw it. And we have this one too. Okay, need to take. Yep. So unnecessary. All right. So I think that's all the supply we have above 50%. That's all the supply we have above 50%. And something I want us not to ignore is we have obvious liquidity in this market. Within this price range, there's obvious liquidity. You can see it as consecutive supply, or what we normally call our supply chain. And so this is obvious liquidity. The reasons I'm drawing this is because I'm heading somewhere. So this obvious liquidity, there's liquidity resting above all these highs, and so there's a possibility for price to push up to grab this liquidity. So we have liquidity here, and normally I just like to pick the highest point and draw a straight line instead of drawing an inverted line. That's just my style. You could literally draw it however you want. Okay, so I will drag this here and also this. So now we have two supply zones to sell from when the market gets there, or if the market gets there. And I'll be more interested in this guy just because he's the one closest to the liquidity, So now we have our 4-hour swing high here and our 4-hour swing low, and we want to know when will it be time for us to join or start buying. From the 4-hour chart, for me, I'll be waiting until this high is taken out. So I won't be considering any bullish signal until this high is taken out. And normally when you have something like that, you just set your price alert there, and when the price gets there, you get a trigger and you know what to do. But we'll still go to our lower time frames, to check things out. So alright, so we have this break of structure. We have this. We're expecting a break of structure here, an internal break of structure, which is represented by an IBOS. Yeah. On the 1-hour chart, what do we have on the 1-hour chart for EURUSD? This works a bit slow. Yep. Okay. Identify this point as liquidity sweep or potential liquidity to be swept. And this remains our 4-hour low. Guys. This remains our 4-hour low. And this is my point. I said when price takes out this high, that's when I'll be interested to engage in this market. So there's a possibility for the market to open on Monday and we'll see some bullish pressure from here. But my analysis tells me to wait. No matter what happens, I wait until this high goes and I come and participate in the longs. Remember, this is a counter trend move. Why is it a counter trend? Because the daily, the monthly, the weekly is saying bearish. The only reason we're considering longs is because we are trading within a 4-hour range and we're at our 4-hour low, and at discount price we buy. So the only reason I'll be doing that is when I get an internal break of structure. When I get that, I'll participate in this buys, and I'll be looking to buy to grab the liquidity above all these highs here. So for me, that's what I'm willing to do. Liquidity above all these highs here, that will be my target. This is 1.9602. That will be target for EURUSD if we get our bullish signal, and our bullish signal is simply a bullish IBOS at this point. So until that, we sit on our hands and wait for price to tell us what to do. So that's my view on EURUSD for the coming week. I'll be sending trade reviews, daily pre-session analysis for EURUSD and AUDUSD. So keep tabs on this channel, and there'll be free trade calls here and on and on. Have a great week, guys.